Let's start off with the Naira. We're starting to see a little bit of ground being gained by the greenback. Many are questioning whether we will see a stable currency into the holiday period. We also know a lot of remittances are set to flow into the country. So we could see a stable Naira, perhaps with a bias towards upward momentum. In other words, a little bit of positivity and strengthening coming through for the Naira. Is that what you're anticipating?
Hello, Eleni. Yes, I anticipate that the Naira will remain stable across the year end, and I agree that there will be some appreciation. Typically, towards December, what we see are increased inflows from Nigerians in the diaspora, and then there are also returning Nigerians coming on holiday, and they tend to ensure that the parallel market stays stable for people who want to buy from autonomous sources. As for supply from the central bank, what we've seen so far is at the end of the last 3 months, there's been an appreciation of the Naira. The Naira appreciated end of September, appreciated end of October, and this week again, end of November, we saw an appreciation of 25 kobo from the CBN.
Kubi, where do you see the Naira by the end of the year? As I said, we're sitting at around 151 to the greenback. We also know that it's been trading within a tight 2% trading range or so. How much strength do you expect?
Not significantly more stronger than it is now. To stay at about these levels, we'll close out the year at around, at the very worst, 150, 150 to 152. Those are the levels we've seen.
Treasury yields down quite significantly. In fact, down 300 basis points. We're seeing incredible demand coming through. What is driving the demand for treasuries at this point in time?
Well, it's a market, demand and supply. What has happened on the supply side is that yields have improved. For the past 2 to 3 months, we've seen a significant improvement in yields. For the first time, we've seen one-year bonds over 10%, and that has led to, in turn, a lot of interest from the PFAs, from people who have money to invest. Investors have tended to move away from doing fixed deposits and have been very encouraged by the Treasury bill yields. So because of that, that has led to a sudden reduction.
Kubi, do you expect this to be sustained into 2011, or do you think that it's basically a knee-jerk reaction to those factors you alluded to?
I think it's a knee-jerk reaction. Into 2011, we'll probably see Treasury bill rates going up. They will hold firm. They should hold firm in the upper single digits into the lower double digits for 2011, because government is still trying to keep a cap on inflation.
Kubi, let's touch on the World Bank and the International Finance Corporation saying that it's going to fund the likes of First City Monument Bank. $70 million is what's being put on the table at this point in time, and it's got to do with the potential acquisition of a distressed bank, that being the likes of Finbank. Clearly this perhaps pointing to the fact that there's increased appetite for various Nigerian assets, even if it means some of those distressed banks. Do you think that's a vote of confidence in the fact that the banking sector could turn around significantly?
I definitely think so. And I also think that those distressed banks are very good value for investors. And the reasons are this. They are existing franchises. They already have a business model. Yes, they got into trouble a couple of years back and they have a lot of bad loans. But because of the steps that have been taken in terms of supporting them liquidity-wise, and the fact that AMCON is now up and running, AMCON is also going to provide a second level of support for recovery of loans and for taking over the sticky assets. And so any investors coming into the country will hit the ground running. They will have customers, they have a customer base, and in 2010, what we've seen from the third quarter results for most of those banks is that they've even turned back into a profit. So while they will be covering a negative capital position, they generally have a pretty robust business model running.
We're seeing credit lines starting to loosen up when it comes to Africa. We are seen as the last economic frontier. What kind of money do you expect to flow into the economy into early 2011?
Well, we had 2005 and 2006. We had quite a few. We had quite a lot of FDI flows, and we expect to be somewhere around 70%, 60 to 70% of where we were at the peak. Because yields are low across Europe and the Western world, there's been a renewed interest in coming back into Africa, where there's improved yields and investors get international investors get better returns for their money.
Fantastic.
For their investments.
Just lastly, very quickly, what do you think the biggest challenge is going to be for the Nigerian economy into 2011? Of course, do you think it's going to be the Naira? Of course, we're also waiting to hear on the budget as well.
I would say it would be sustaining the Naira, sustaining the exchange rate. So far, and then maybe a little bit of inflation. So far on exchange rates, we've done very well in terms of keeping it stable. I foresee we should be able to keep it stable for a while. But if pressure picks up again in early 2011 due to the fresh import cycle as we start a new year, then there could be some pressures. I see some pressures early in 2011 there, and it remains we'll watch how central bank intends to manage that. At the same time, we still do have a bit of inflation to worry about. Inflation is still high, and that also remains a major concern, is to check inflation and get it back where the government has targeted, which is single digits.